So I'm a big believer in cycles. I follow the Shemitah cycle, which is a 7-year cycle, which I can tell you more about later. Also the 18.6-year real estate cycle, the long cycle, which is a 60-year cycle, and the business cycle, of course, which is roughly a 4-year cycle, and that's the economic cycle as well, and that fits in with the Bitcoin halving cycle. So I follow lots of cycles. I follow the 4-year cycle. Obviously, I got into first because of Bitcoin. The halvings every 4 years, and that actually falls in. Then I realised that falls in with the elections. So the election cycle in America, the US elections are every 4 years in November. They fell in 2024 November. They fell in 2020, 2016, 2012, 2008. And 2008 is when Bitcoin was formed. Obviously, that was when Satoshi created Bitcoin. That was when it was launched. That was when the Genesis block was mined. And since then, I believe Satoshi knew exactly what he was doing. He understood economics. He understood what was going on in the world at the time, around the 2008 subprime mortgage crisis. And he knew that was a good time. This is my belief. This is not factual out there. If you ask AI, ask ChatGPT, it will tell you this is not factual, but it could be, it says. I believe it's the case. Perfectly timed on a 4-year cycle, which runs with the economic cycle, which is the business cycle. And he timed the halvings to take place in the election year. So come on, that gives you a clue, doesn't it? So the halvings take place in the election year. This is the way I see it often goes, right? You get the Bitcoin halving, after a bear market. Prices run up a bit towards the halving. And then you get a corrective period. And it doesn't mean it has to be go down massively, but like we saw last year, sideways for 7 months, I believe. And after that 7 months, we reached the elections. And, okay, Donald Trump was coming into power. We thought that was bullish for markets anyway. He's talking about Bitcoin strategic reserves. And look what happened. The price went up. It went up significantly after the elections, broke 100k, 110k, was hit a little bit higher. And since then, we've seen some pretty poor price action. And I think there's a lot of disbelief at the moment in the markets, particularly around altcoins. People think maybe crypto's dead because we didn't get an altcoin season bang on mid-January like we did in 2021 or like we did in 2017. Things are different this time. We've got all this going on with the tariffs at the moment. April 2nd today, Liberation Day, and there's a lot of FUD, fear, uncertainty, and doubt in the market. And it's important to remember, when you're a long-term investor, if you believe in what you're investing in and you believe in a cycle and that it will play out and have all the stages of a cycle that I believe happens, then you hold for it. It's just noise, Cancel out the noise. Don't be looking at 1-hour charts, 4-hour charts too much. I mean, you can go on the 4-hour charts if you're trading and everything, but if you're investing, you want to stick to the weekly. If you want to break it down a little bit, look at the daily, what's going on. But I wouldn't make any decisions based on daily charts. I'd look at weekly candles and look at the monthly, really, if you're much more longer term, of course. And so that brings me to talk about the cycles. So you've got the 18.6-year real estate cycle. Obviously, on average, every 18.6 years. That's a bit too precise for my liking. I'd rather stick to like the 18 to 19-year cycle, but we'll call it 18.6. And now I've back-tested these cycles. I've read books about these cycles. You can see all the signs, the way the stages play out. And that's what we're going to get into. That's what we're going to try and explain over the coming videos. And if you look back, I mean, if I could read off the dates to you another time, but if we go back to the most recent start of a real estate cycle, we go back to 2008, the subprime mortgage crisis. The markets bottomed in 2010, roughly. So that brings us 14 years from now. And bear in mind that the real estate cycle, it takes roughly around 4 years to go from top to bottom, and to find a recovery. So 14 years in, I'd say we're near a top of the real estate cycle. But don't worry, because what tends to happen is the stock market will run 12 to 18 months after a real estate market top. And I believe that means we've still got some time for positive markets. There, we've still got time for all the stages of the crypto bull run to play out. And then the way you can know where you are within a real estate cycle as well is to start breaking it down into the other cycles as well. Like I said, you've got the 4-year business cycle, economic cycle, which leads into the presidential cycle. And going by presidential election cycles, the markets only had a negative post-election year, so after the elections, a couple of times in the last 30 years. If you go and look at the NASDAQ, you'll see that. And that was one of those times was 2000, 2001, and one of those times was 2008. And I believe we're heading for a bubble top. I believe there's going to be a bubble in tech stocks and AI. I believe there's a housing bubble. I believe crypto could be in a bubble as well. But a bubble bursts when there's been a mania phase. And I don't quite feel like we've experienced that mania phase yet. And in a mania phase, you'd expect to see a lot of people making a lot of money, a lot of uncontrollable spending, a lot of irrational investment decisions, like getting all your life savings, taking out a credit card, people remortgaging their homes because they believe the markets are just going to keep going up. They're gonna get rich. Everyone's a genius. This type of behaviour. And also, when you get the collapse, there's often a lot of over leveraging, and you'll see, like in the last cycle, we saw Celsius offering fantastic yield returns, people putting their pensions into it. You had the likes of Luna and UST, where people are converting their real dollars into a algorithmic stablecoin. You're going to see all of this sort of stuff happen again. It won't doesn't always repeat, but it often rhymes. So I believe we see that mania phase. I believe we see Bitcoin dominance for one. We're going to talk a lot about Bitcoin dominance in the coming videos. But Bitcoin dominance is at the top. It's going to top out soon. You don't see the end of a crypto cycle with Bitcoin dominance at the top. It needs to break down, go to a low, and as it's going to that low, you're going to see all the altcoins pop off. And I believe that stage is coming. And I believe that stage is where we can all make a lot of money. So, yeah, I'm looking forward to that. So, let's go to the charts quickly. As we're talking about Bitcoin dominance, let's bring that up. Here we go. Right, this is on the weekly chart. Look at that uptrend all the way since September 2022. And it had a bit of a slowdown here back in November, just after the elections. Yeah, it broke down. We saw altcoins pop off and do fantastically well in that time. And it was only short-lived, only for a few weeks. I mean, I saw my portfolio almost triple in that period. And it's come down a lot from there, I'll be honest with you. At that point, I think it was somewhere around January. I was expecting an altcoin season, just like many of you. And I converted some of my Bitcoin into altcoins. Bit of a mistake, but I believe in the long term it plays out. I believe Bitcoin dominance is going to top out again. I don't think I'll be surprised if it takes out this wick. But if it doesn't take out that wick, look at this. Yeah, this is the last cycle in 2020, 2021. Yeah, January 2021 was when the altcoin season started, and it was around this, and it's topped up at this level around 73 twice there. So, I mean, could it go to that? I mean, that means your altcoins are going to get crushed. The reason I don't think that's going to happen is because when you look at things like ETH BTC and some of the other Bitcoin pairs, they've seen quite a lot of punishment. Doesn't mean they can't receive more, but I believe they're pretty much at their bottoms. I believe Bitcoin could pump soon, which might take it a little higher, or if it dumps, it could take Bitcoin dominance a little higher. But then we'd start to see a top, and then we could start seeing a decline. And I think the decline, not sure if it gets quite down to that 40%. But look, as you can see, it did it in 2018. Yeah, and it's done it again over here. So could it get that low again? Sure it could. Yeah, and look, here we go. Look at these blue lines. See these blue lines? These are elections. Yeah, we had Bitcoin dominance fall off a cliff back when altcoins released back in 2017. A lot of new ones were coming about then, and it bottomed around Jan 2018. You saw the elections in November 2020. Bitcoin finally topped around December 2020, and then we saw altcoins do very well until May 2021. Now here we are, and people are they're going crazy. They're saying alt season is not coming. When alt season? They've been calling it for ages. It's not coming until this breaks down. And I'll show you what I think is going to lead to that breaking down as well, right? Okay. One thing we've got to look at is the weakening dollar. Yeah. The DXY. And look at this channel. Look, hitting the top. And it's been ranging in this middle part of it for a while. And see these lows? Look here, this lows. I believe we're coming down to here, the DXY, around 97. Yeah, that makes sense to me. You know, it's never a given that it's going to happen. But as you can see, DXY has also come down to this 800 EMA a couple of times. This week we went below it a couple of times in 2021. Yeah, it could come down that far. That's where it is on that trend line as well, almost as well, around 96, 97 at the moment. So I believe that could happen. Then if we go down to the ISM, okay, if you want to look up this chart, its ticker is USBCOI, okay. And if we look at this, very, very cyclical. Now, I know this chart might seem like a bit of a tartan pattern here with all the colours, but all these lines mean something, yeah. I've got reds marked for times you'd want to sell, yeah, based on the ISM, and green marked as times you'd want to buy based on the ISM. Now, if you look at the tops, okay, we go back to March 2021, we go back to Feb 2018, and we go back to April 2014, okay? Very, very cyclical. You could go all the way back, yeah? Now, ISM, we've seen it form this low here, which is almost like a reversal pattern. It's like a W, yeah? This is like to trap, it's like the patterns you see to trap the traders in the charts on Bitcoin or NASDAQ or whatever you're trading. If you're a day trader, I think you see these patterns all the time, reversal patterns, W patterns, yeah? So we've got a drop, we've got a rise up, yeah? Enticing people to go long, then, oops, that was unfortunate. Here we go, down to the low again, okay? Then we've had a breakout, come up to the 50, retesting this 13 EMA. And although some might say you can't do TA on this chart, well, we'll see. But one thing I can say is it's very cyclical, yeah, very cyclical. And when this goes up, you have good conditions for markets. This is the ISM, yeah, the Institute for Supply Management, and it's the Purchasing Managers Index, yeah, for PMI. So yeah, Raoul Pal talks about this a lot. If you don't know about Raoul Pal, make sure you follow him. He's got great charts, great data. He's an expert. He's been in the game for about 30 years. I pick up a lot from him. So yeah, so that's the ISM. So I think the ISM's going to start working its way up. It already broke out. It looks like it's retesting, coming back down to 49. When it's over 50, they say it is bullish for market conditions. Okay. Then if we go and look at the Fed balance sheet, yeah, let's get that on a monthly chart. Okay, look at this. So obviously when it's trending down, this is the Fed tightening their balance sheet. Yeah, that means they're removing liquidity from the markets. When they increase their balance sheet, the Fed are increasing their liquidity in the markets. So here we go. So if you look back when they was tightening back in 2019, then obviously COVID landed, but they'd already started to pick up before COVID. Maybe they knew what was coming. But you see from Feb, yeah, and March, a lot of liquidity coming in. And people say, yeah, but that was because of COVID. They needed to inject liquidity and all of this sort of stuff. They needed to create stimulus, yeah. And it rolled over in 2022. But it wasn't always a COVID. Not when this was going on over here, yeah, and not when this was going on, yeah, and not when, look at that leap back there in 2008. That was obviously from after the financial crisis, but it doesn't always follow some sort of crisis or something, yeah. Look, this time, 2013, 2014, there was no crisis there, yeah. So, and it's just like all this trend over here from 2003 all the way up, a steady climb. Now, there's nothing to say that this is going to like straight up reverse anytime soon. Yeah, this could take a while to play out. I think the Fed they've reduced their tightening from like 25 billion to around 5 billion. Yeah, that's an 80% reduction in tightening, but at the same time, they are investing in something else. I'll have to look that up and tell you a bit later on. But they're buying something. I can't remember what it was. I'll have to get back to you on that one. So anyway, let's go to Bitcoin. Okay, let's see what chart we should bring up for Bitcoin. Okay, quite like this one. Yeah. Let's go back onto the weekly. Okay. This is one I really like. So, if you see this line, yeah, taking you from the top of November 2021 to the top of March 2024, obviously this was like a massive cup and handle. Some are saying it's an inverse head and shoulders, yeah. But whatever it is, it's a pattern to me that looks like a big breakout is coming, yeah. Let's zoom in a bit, yeah. Look how we came back and retested the 50 EMA, the 50-week EMA, when it was almost on that line. It's almost tapped that line perfectly, yeah. And look, and you can see we've rose that 50-week EMA. If we can hold here, and let's zoom in here a bit more, we've got this downtrend. Let's bring up on a daily to show you a bit more detail. Okay. Now I'm going to take the EMAs off, and I'm going to put the golden and / death cross indicator on. Okay, you need to use this on the daily, by the way. It's the 50-day EMA, the top one, and the not EMA, the 50-day SMA, and the 200-day SMA. And I've actually drawn these lines here because I want to show how soon we could potentially see a death cross. Okay, now don't worry, don't panic. When I say death cross, it's not anything to be feared. Okay, you've got previous times when death crosses have happened, it has called a low, a local low. Okay, so we've got tariff announcements coming out today, which will be, by the time I release this video, they'll all be out. They'll already be out. We'll all understand a bit more. We'll have some clarity. Who's going to get punished by these tariffs? Who's going to be reciprocal and fight back with also strong tariffs? And who's going to broker some sort of deal and negotiate zero tariffs both ways? But I think we're going to find this out. Then we're going to get to this stage. So maybe by this weekend, we will see a death cross. What will increase the likeliness that we see this death cross sooner rather than later is maybe a drop to the downside. And I could see that happening. I could see that another drop to the downside for a couple of reasons. Firstly, I believe a liquidation has to happen before we move up. So, and some of the big liquidations we've had in recent months have been to the magnitude of like 1 billion in a day in 24 hours. That's the sort of liquidation event I'm trying to look at. If I see that, based on everything else I'm about to talk about and what I'm looking at, I'd see that as a great buying opportunity. So when you see longs getting liquidated, they're your buying moments. If you're DCAing, if you're averaging in over time, they're great opportunities. They're dips to buy. If you believe the cycle will continue, then why not buy? Don't fear it. The traders can fear it. If you believe in an asset like Bitcoin, or maybe you believe in your altcoins, it's a great time to buy. So let's go back and look at the last couple of death crosses. Yeah, let's zoom out a little bit so we can see this. Okay, see this death cross here, back in the 12th of August 2024. Okay, very close to that low. Yeah, I mean it came slightly after, and that was a low. That was a low to buy. A great buying opportunity around that time. Okay, so if you'd bought exactly, maybe it would have been a bit higher. So, buying just before the cross, great idea. Okay, let's go back to this one. Yeah, here we go. Back in September 2023, we'd corrected from that high, and that pretty much almost precisely called the low back in the 12th of September 2023. Now, there's other times when death crosses are pretty bad. This death cross here, yeah, back in January 2022, saw a significant downside afterwards. But if you understood cycles and understood where we were, you might say, the 4-year cycle's played out. We've seen a huge correction followed by new all-time high. Bitcoin dominance is at a high. Bitcoin dominance is at a low. Altcoins are going nuts. Everyone's euphoric. The Fed have just started to hike interest rates. There were so many signs, really. I mean, look, I'm not trying to say I knew everything back then, because I didn't. I've learned a lot. I learned a lot in the last bear market, and I tried to learn from my mistakes, But, I mean, you had a death cross here, the one before it, and maybe you might have been a bit fearful to buy that one because of how far the market had gone up at the time. And, we'd already had quite a decent alt season as well, lasting weeks. But that was roughly around a low. I mean, came in more on a breakdown towards the low. So, buying a little bit after the death cross in that situation would have been a great buy. Sometimes it's good to just DCA over a number of weeks when you feel it's right, because, all of this chop, you'd have been like, am I making the right decision? Am I making the wrong decision? What should I do? Oh no, I'm an idiot. I've made a load of mistakes, and it's not worth worrying about. I always find better just to DCA. If you get paid monthly, just do a monthly DCA. If you get paid weekly, do a weekly DCA.